It's successful in life.
என்ன ஜோக்கா? என்ன யார் சொல்லி கொடுத்தது? அவனு செய்யணும்.
இனிமே நடக்காம
நானும் பாக்குறேன்.
Great horn owl Joshi. இது ஆல்ரெடி ப்ரொடெக்டட் ஸ்பீஷீஸ் லிஸ்ட்ல இருக்கு. இது எங்க பிடிச்சிங்க?
Good evening, all.
Good evening.
Good evening.
Yeah. Okay. So my voice is audible. Okay. So shall we start? We almost have no like 20 participants as of now. Yeah. Please mute your audio. Please mute your audio. Mr. Vivo has to mute his audio. Okay. So let's start. So in today's session, we are going to see about compound journal entries. Okay, so compound is nothing but the combination of journal entries as one single entry. Okay, this will occur, no, like in case, no, like when the transactions related to no one particular type of no like account happens. For example, if the owner has no like invested the money in the business the same day or the same time, he has no like invested for no like not only for the capital but also invested for no like purchasing uh, the building for the company, and has invested for purchasing the machinery, invested for purchasing the raw materials, and invested for purchasing the office furnitures. So everything comes under investment. Okay, though cash is being no paid differently to different suppliers, the investment being no in cash transaction, so it all no it can be no like combined into one single entry system, and that's called compound journal entry. So let's have an example how this looks like. Hope my voice is audible. Yeah.
Yeah, we can hear your voice, but
Okay.
I think some
Okay.
background sound is coming. Not sure from where.
I don't think from my side. Okay. So see, the participants has to know like mute the audio. So only if you have no like anything to speak, you can unmute and speak. Otherwise, whoever no like has logged in, immediately mute your audio. Okay. So let's see. So what is a compound journal entry? It's a single entry that combines multiple transactions or accounts into one journal entry. And why? To simplify the recording process and to improve the efficiency. And when the transactions of the same nature, that is the same type occur. So here the same nature, I have given an example. This all know like all the cash transactions. Cash is being invested in the business. Cash is being invested for purchasing the building for no like office purpose. Cash is being no invested for purchasing the raw materials, and cash is being invested for purchasing the machinery, and even cash is being paid no like for purchasing the office furniture. So everything comes under cash and everything comes under investment from the owner's side. Okay, so since though there are no like multiple transactions taking place, everything comes under single entry system. So everything comes under single accounting system. So these transactions, it can be entered in the journal by means of a combined journal entry. So let's have an example. So on April 1st, 2023, Mr. Akash commenced his business with 10 lakh rupees, and he has invested for no purchasing goods of no worth 3 lakh, and furniture no for official use, that's for 1 lakh 50,000. So let's see how compound entry works here. So instead of no like making it as different transactions or different entry system with each giving each narration differently. So we are making it as a single entry system, single transaction system. So cash account debtor, which is 1 lakh, 10 lakhs, and that is capital. Okay. So stock account debtor, so that is purchased for okay, I think I have taken something different. Okay. So this should be 3 lakhs, right? 3 lakhs, yeah. So stock account debtor, it should be 3 lakhs, and furniture account debtor, it should be 1 lakh 50,000. So if you add up the total, it should be 1 lakh 35,000. 13 lakh 15,000. It should be 13 lakh 50,000. That is 10 lakhs, which is the capital, and 3 lakh, which is amount invested for purchasing the raw materials, that is for purchasing the stock, and 1 lakh 50,000 for purchasing the furniture. So to add up everything, so it comes around 13 lakh 50,000. So this is how the compound entry system works. So is it clear? So narration part, for everything you
Yes,
can make it as one single narration. You don't have to give narration for each and everything. Clear?
Clear.
No, fine. So let's have another example, and the proper way. Okay. The proprietor may withdraw certain amounts from the business. Okay. Let's take an example of the drawings account. Drawings is something where the owner of the business takes back money or money value from the business after investing in the business from the business account. If the owner of the business is taking back a money or money value, whatever is of money value, whether it be furniture, whether it be the goods, or whether it be any office stationery, or it can be anything, or whether if he is using the office building, a part of office building for personal use. If it is being taken for owner's personal use, so everything comes under drawings account. So we have another example. So on July 17th, Akash, the proprietor, drew 5,000 for personal use. That is 5,000 is withdrawn from the office cash. Okay. And again on July 25th, he deposited a check for self-check for 10,000 for personal use. That is, the business will be having an account with the bank. So from the bank, again, it's the business cash. It's the cash of the business. Okay. So withdrew the amount for 10,000 by giving a check. And on 30th July, so the proprietor took 7,000 worth goods for household use. So this goods may be maybe the raw materials, or maybe the stock, finished goods, or maybe the office stationery or the furniture. Okay. So how the compound entry works here is like this. So July 17, drawings account debtor to cash account. Here you cannot make just like the previous one. You cannot make all the three entries and make it as a cash account, because here the cash has been withdrawn. The first particulars, the cash has been withdrawn directly from the office accounts, directly from the office. And in the second transaction, you can see the cash has been, again, the office cash has been withdrawn, but not from the office cash. That is not from the cash which is being used for day-to-day rotational purpose, but from the bank, in which the organization has its account. Okay. And then finally, the money value, not the money, but the money value of the goods, that is being taken for personal use by Mr. Akash, who is supposed to be the owner of the organization. So here you need to have different narrations. So in both the ways, you can have compound entry. So this may save time, and this may save you some the time you take for inputting all the details each and every time. Clear? Can you see the difference? Is it clear?
Clear.
Fine. So hope you have no doubts as of now. Okay, let's move. Okay, so how do you make an entry for purchase return in journal and no like sales return in journal? First, you have to understand what is a purchase return. So it is not like you're doing a purchase from the company's side, and the receiver who has bought the goods has no like returned a part of the good or the whole goods which is being purchased from the organization due to many reasons, maybe because of damage or because of no like late delivery or wrong goods maybe no delivered to that person, or instead of sending to another organization you might have no send it to this particular organization. So the reasons may be many. Okay, so in those cases the purchase returns or sales returns may happen. So when the organization is returning back the goods which is being purchased, it's considered as purchase returns. And the other parties who are returning the goods to whom the sales is being made, so that is considered as sales return. So you can have the definition here. So purchase return, it occurs when buyer returns goods and the journal entry debits the accounts payable or cash account and the credit the purchase returns account. So the creditor, in the creditor column, it should be no purchase returns account, and in the debit column, it should be no either the accounts payable, that is the organization name or the person name, or no to the cash account. If it is a immediately the cash has been returned, so it should be in the cash account. Or if it is a credit a purchase, you haven't paid, or no the supplier you haven't paid the supplier, or the receiver hasn't paid to the organization. In those cases it's still in credit, so in those cases it should be in accounts payable. So sales returns, it occurs when customer returns good and the journal entry debits the sales return. So it should be sales return debtor and the accounts receivable or cash account creditor. So this should be the type of entry which you should not be entering in the journal. So let's have a look. Yeah. So here comes the example. So on September 2023, that is on 3rd of September, so goods has been sold to Prof LLC. So that is for 5,000. So how the journal entry here is Prof LLC account debtor and to sales account. Okay, since it is not a credit transaction, I'm sorry, cash transaction, we haven't mentioned cash account here. Okay, so the narration you can mention as being goods sold to Prof LLC on credit. So 5,000 credit, that is done. And then on 5th of September, purchased stationeries from Rahat and Company, that is for 3,000. And here is the journal entry. Stationaries account debtor. So here you will be wondering, so why stationaries account and why not as a purchase account? So purchases, when it is done for for goods, when it is the stock has been purchased or inventory has been purchased or anything related to the goods. When a purchase is done which is related to the goods or whether the goods is being purchased, then you have to mention here as purchases account. Clear? Or other than the goods, any purchase is made for running the office, running the organization efficiently and smoothly. So that comes under stationery. Even if the machinery is being purchased for production, so that comes under machinery account debtor and not as a purchase account debtor. Clear? So purchased account debtor is mentioned only when there is a purchase of goods or sales of goods. Is it clear?
Yes.
Yeah. Okay, fine. So stationaries account debtor to Rahat and Company creditor, and again being for stationaries purchased on credit. Okay, because here it hasn't been mentioned that there is a cash transaction done. Okay. Now purchased on cash from Madison's. So here the cash part comes. So here purchase account debtor to cash account. And no, this is simple entry. Being cash purchase from Madison's. That is for worth 10,000. So for goods worth 10,000 is being purchased from Madison. Sold to Arrow and Brothers on credit, 20,000. So Arrow and Brothers account credit debtor, because in personal accounts, it's the debit is the receiver and the credit is the giver. So Arrow and Brothers received the uh, goods. Sales has been done to the Arrow and Brothers. So Arrow and Brothers account debtor 20,000 to sales account creditor 20,000, being the credit sales. Now, here comes the returns. That is the purchase returns. Return to Madison's. So you have purchased on cash from Madison's 10,000. That is, you have purchased goods worth 10,000 from Madison's and you have paid as a cash from the company. Now you feel that no, like a part of the goods, no, it's not okay for you, and you're returning 3,000 worth goods, no, to Madison's. So the Madison's has to pay the goods, I mean the cash worth of 3,000. Okay, so that worth, no, like they have to pay you back. Okay, since you're returning the goods. So here you can see that it's Madison account, because since you're returning, Madison is the receiver. From the company's point of view, Madison is the receiver. So debit the receiver and credit the giver. Company is the giver. So Madison's account debtor 3,000 to purchase returns account creditor 3,000. Mention as purchase returns and not as purchase. So this is the purchase returns. You're returning a part of the purchase. No, you have not done with Madison's. Being purchase return for defective goods. You can know in the narration, you can mention the reason why you are returning the product. Clear? And then, okay, Arrow and Brothers returned the goods. Okay, here you can see you have no sold goods worth 20,000 to Arrow and Brothers on credit. They haven't paid the amount. Okay, but out of that, Arrow and Brothers, they have returned the goods worth 5,000. So they are no like obliged to pay right now only 15,000. Clear? So what is the journal entry here? Sales returns account debtor 5,000 to Arrow Brothers account debtor, sorry, creditor 5,000. So why it is sales account debtor? Because sales returns no is the aspect where the goods has been received. So debit the receiver, credit the giver. So who is the credit here? Creditor here, Arrow and Brothers, since they are giving back the product, and sales account debtor. Clear? And then paid for packing roll. If it is no like any kind of stationery is being mentioned, like other than simply mentioning a stationery, like a few accounts, no, like they may be mentioning, no, like a particular, no, like a packing roll, or no, like the bundle, the no, like the rope or the bundle or whatever, no, like it would be no, like so everything comes under, all those things comes under stationery. You cannot mention here as packed and packing roll debtor. That you cannot mention because this comes under stationery. So here you can mention as stationery account debtor to cash account. We have paid as a cash. Okay. Though it is not no like mentioned here as a cash purchase. So usually it's considered as a cash purchase. Like buying no stationery, no, it's always considered as a cash purchase. Okay, like how you know always take no like paying rent and paying salaries, it's always considered as a no like cash. Cash is involved. You cannot no give as a credit, right? So stationaries, buying stationaries, no, it's always no taken as cash. But in case of no like credit purchase, buying stationaries no on credit, definitely no, it would have been mentioned here. So in that case, you can mention as to purchase account creditor instead of cash account. So the entry would be stationery account debtor and to cash account creditor 3,000. In the narration, being cash paid for packing roll. Here you are mentioning what stationery you have got. That is the company has purchased. And then here you can know like see the compound entry. So on the same date, this is done on the same date. So you don't have to know like do multiple entries here. Okay. So on the same date, and paid salaries worth, that is no like at least no like 2 lakhs has been paid as salaries, and rent worth like 50,000 of rent is being paid. So both are done on the same day. Okay. So here is the compound entry. So salaries account debtor being all these like cash transactions. Salaries is paid as cash and rent is paid as cash. Even if the bank pays the salaries, initially the company will be depositing the amount in the bank and bank like discharges the salaries. Okay. And here salaries account debtor, which is like worth 2 lakhs, and rent account debtor, that is both are receivers. Salary account is the receiver. Through salaries, the amount is going out from the company. And rent account debtor 50,000 to cash account. Since both is both the transactions is done on the same day, so you're taking the the common value, which is the cash, account. So to cash account creditor, so you're calculating adding up these two aspects, so which comes under 2 lakh. I'm sorry, 2,50,000. So here, in the narration, you can mention as paying rent and salaries paid. Clear?
Yes, ma'am.
Clear, ma'am. Yeah, ma'am.
Yeah. You have any doubts as of now? So what we have seen here is compound entry in journal, how to make compound entries. We have two types of compound entries. Let me give you a glance again. So this is one type of compound entry where cash is the common aspect. Okay. Here, I think there is a mistake done. Actually, in the first column, it should be capital account debtor. And in this column, it should be cash account creditor. So that's a mistake done. I will change it before forwarding the PPT to you. Okay. So here, since the same date, the date is the same and cash is the common aspect here. So everything being the investment. So all three are same. So you're making a compound entry. And here, if you see, the dates are different, but the entry, the type of drawings, the type of transaction is the same. All three are drawings by the proprietor. Though the date differs, all three are drawings by the proprietor. But he drew in different modes. So 5,000 he has taken as a cash from office, rotational cash, and another 10,000 he has withdrawn from the office bank account, not his personal bank account, but office bank account. That is the organization's bank account, and by producing a check, and then took 7,000 worth of office goods, that is the organization stock or raw material, whatever, for his personal use. Okay. So since it's a proprietor's withdrawings, we are now making it as a compound entry. This also comes under a compound entry system. Okay. And then purchase returns and sales returns. And this is how it is being done. So always know, if it is a purchase return, always mention here as purchase returns accounts. And if it is a sales returns, always mention here as sales account debtor. So be sure you're seeing all the transactions from organization's point of view. And be very sure if it is packing roll or whatever stationery is being mentioned here for whatever stationery books or office files. It can be office files or ledgers or journals or computers. Everything comes under stationery. Okay, so don't mention as computer accounts debtor or uh, packing roll accounts debtor. So instead of that, you can mention as stationery accounts, and in the narration you can clearly mention what has been purchased. And again, you can see a illustration of the compound entry. So since all the two transactions are being done on the same day, that is on 31st of September, and both being the cash transactions. So cash is the common aspect and the date is the common aspect. So we are making it as a compound entry, and we are mentioning in the narration as well. Clear?
Clear, ma'am.
Okay.
Yes, ma'am.
Yeah, madam.
Okay. So now we are moving to ledgers. So as of now, we are okay with the journals. Okay. So this is the maximum entries. You will find it in while making a journal, not more than this. Okay. And then after preparing the journal, you have to make ledger posting. So that is taking all the transactions, that is moving the registered transactions in the journal and posting it in the ledger. Okay. So what is the differences in ledger? You can have individual accounts column, and all the financial transactions is being separated. That is not separated. I mean, it's unitized in a different way. Unitized according based on cash aspect, based on credit aspect, or based on the personal accounts, who is the receiver, who is the giver. So based on those aspects, it has a unitized transactions. And this is the basis for preparing the financial statement. So if you want to prepare financial statements like trial balance, profit loss account, and balance sheet, so you have to take the ledger postings. You don't have to go to the journal postings. Journal postings or taken from the, I'm sorry, ledger postings are taken from the journal entries. So once ledgers are prepared, you will be preparing trial balance out of it. So from ledgers and trial balance, you will be preparing profit and loss account. And in many cases, profit loss account and balance sheets are prepared even without preparing trial balance. Directly, they can take the entries from ledger and they can directly go well in preparing the final account statement. So, before seeing how to make an entry, you have to know the ledger rules. That is, debit the receiver, credit the giver, and debit the purchases being done. So, if there is a purchase being done, obviously there will be an expenses from the organization side, and credit the sales. So obviously, if there is a sales, there would be gains. The money will be, you will be, I mean, from the organization's point of view, you will be getting the money back, right? So in the first case, any increase in assets or expenses is debited. So here, any expenses or assets is debited, and the receiver of benefits is debited. So the receiver, increase in assets, and increase in expenses, all the three aspects are being posted in the debit column. And so what would be posted in the credit column is increase in liabilities, equity, revenue, and the giver and the source of funds. So all these aspects are then posted in the credit column. Clear? Okay, so when you see the example, illustration, it would be more clear. So let's directly move on to the example of ledger posting. Okay. This is one part of the journal entry. Sorry, one part of the journal entry. So here it's mentioned as on June 1st, 2023. So cash account debtor, which is 10 lakhs, to capital account creditor, 10 lakhs. So being amount invested in business. Okay, so the owner, the proprietor has invested 10 lakhs as a capital. So once you have that information, so this is how you post it in the journal entry. So now we are going to post this transaction in the ledger. So this is the chart. So if you can see the whole column, the whole column, I mean the whole page is being divided into two columns. So first column, it has the details of the debtor column. It has the date and the particulars, the journal folio number, and the amount. Again, the second column has the same information just like the debtor column. That is, the creditor column has again the date, the particulars, journal folio, and the amount. Okay. So while posting this journal entry to the ledger, so first since we are now having the cash aspect on the first line, we are making it as a cash account. The first entry would be the cash account. So this is the heading of the ledger posting cash account. and then always start with the heading of the account, cash account, which is which you can take from here, cash account, and date is already has been mentioned here. So this is the debtor column, right? Cash account debtor. So in the debtor column, you have to mention the particulars to capital, and journal folio is the folio number, the page number, where this transaction is being posted in the journal. So take that page number from the journal and you can write it here. So it is for easy cross checking. And the amount. So mention the debit amount, which is 10 lakhs. Okay. So this you can leave as it is because this is the cash account. So here you can leave as it is. Then comes the capital. Second line is the capital account creditor. And then, so here the heading of the journal post, the ledger posting would be the capital account. Again, make the same thing, debtor, date, particulars, journal folio, amount. But here in the second column, that is in the creditor column, there comes the date and the other details, that is particulars by cash. So how the capital is being invested? It is invested by cash, which is 1 lakh rupees. Here, capital debtor, and here cash creditor. So capital is completely taken as a debtor, but it is posted as cash account. Cash account in debitor column, the capital is mentioned here, and in capital account in the creditor column, cash is mentioned here. Okay, clear? When you start working on this, when you start posting, from journal to ledger, then you will get to know more about it. Okay. So initially it may seem, like confusing, but it's very easy. Okay. Once you understand the basic concept, always remember, two things you have to remember. Always, see every transaction from business point of view. And the second thing is there is a rule for each accounts. It is personal, real, nominal accounts. In personal accounts, it's always the debit the receiver, credit the giver. And in real accounts, debit what comes in, credit what goes out. And in nominal accounts, it's debit all the expenses and losses and credit all the incomes and gains. So these rules, always, register, in you, so that for each and every transaction, if you're confused, you can always apply that rule and cross check whether you have done the correct entry. Clear?
Yeah, can you please say the rules, the 3 rules which you say? Can you repeat, please?
Sure. We have 3 types of accounts, right? Personal, real, and nominal accounts. So personal accounts, it always personal means person's accounts. So personal accounts, either it would be an individual who is associated with the organization, or it may be another organization or agency who's associated with the from the organization, or it may be the type of transaction. Okay, say capital account, or the sales returns account, purchase returns account. So it may be the nature of the transactions. So all these comes under personal accounts. So the rule is debit the receiver, credit the giver. This is again from business point of view. You're seeing the transaction from business point of view. Debit the receiver, credit the giver. Okay. And then comes the real accounts. Real means whatever is real in the situation. So real means all the tangible and intangible assets of the organization. So tangible, which can be seen, touched, and felt. Intangible, it has some monetary value but cannot be seen, touched, and felt, like goodwill, trademark, and the patent rights and the company's logo. So these things comes under intangible assets. Okay. So the second thing, that is the real accounts. So the real account rule is debit what goes out, credit what comes in. Okay.
Clear,
And the
clear on that.
third one, yeah. And the third one is the nominal accounts. So nominal accounts, it is no like a debit all the expenses and the losses. So whatever no goes out of the company is considered as debit. Okay. And all the incomes, revenues, and gains is considered as a credit. Clear? So these are the three basic rules. We saw this no like I think no in the first or second session. You can know like cross check it. Yeah.
Okay, thanks.
Yeah. Okay. Fine. So like guys, you understood know how ledger posting is done?
Yes.
Yes,
Yeah.
madam.
Yeah. Very feeble voice I can hear. Okay. Fine. So don't worry. No, like journal. No, we have seen 2, 3 illustrations. No, like last session we have seen 2 illustrations, and this session we have seen another 3 more. No, like examples. So we are quite sure about the journal entry. So likewise, even for ledger, no, we will know like have more no like illustrations and examples, so that no like you will be no like much clear about the ledger posting. Okay. So once both are no, once you're confident no about no like both the things, we can no then move to preparing the trial balance. Clear?
Yes, ma'am. Clear, ma'am.
Fine. So, what I would like you guys know, like to do is, I didn't have time to know, like type all these things, no, because I had some other work. So, I have taken a screenshot of these two. So these, no, like I am going to know, like give you as exercises. This is for no your benefit. I'll be sharing the PPT. Go to the last slide, and there are 3 exercises here. So all are no like journal entries only. No, we are not touching the ledger posting right now. Okay, so just we have just seen a glance of what is ledger and what is the rules and what is how the ledger posting is done. Okay, so first you let you guys be no like very confident and clear about journal posting. So this is possible when you only when you do it on your own. Even if I take no 5 to 10 classes on journal entries, only when you know do it on your own and find out the errors and mistakes and corrections, like after doing the corrections, you will clearly understand how journal posting is done. Okay, so that's why I have given 3 simple exercises to be done. Okay, so when you have time, what you can do is try these exercises or all or no like journal entries only. Prepare journal entries. Go with no like the same specifications. We have specifications for journals, right? Start with the date and then particulars, then ledger folio, the debtor column and the creditor column. Okay. So in a notebook or wherever no you would like to in your system. So create that no like the outline and then no start posting these entries. So make sure you're giving the narration for each entry. And if you see no like there is a chance to know like go for any compound entry, you can do that. For example, if you see the third exercise, in the third exercise on June 30th, you can see cash has been paid for stationery, rent, and salaries. And no, these are all the cash transactions. And no, it is done on the same date. So the compound entry, no, compound journal entry can be done from this. Yeah. So try all these exercises. Okay. So next week, okay, next week, what we can do is once you're ready with the answers, please be ready with the answers. Okay. Within next session. So I will know, like I have the answers no ready with me. So we will cross check. Okay. So while cross checking, you will understand whether what you have done is no right or wrong. Clear?
Okay, ma'am. Clear.
Yeah. Okay.
Yes.
So any doubts as of now? I know, no, like still there is a confusion in no like ledger posting, but don't worry, we have just started. We will know like again go for no two or three or even 4 maximum sessions, no, to be very clear about ledger posting. I'm sorry. Yeah, ledger postings before moving to trial balance. Okay.
Okay, ma'am.
Yeah. So any doubts in journal postings? No, I have received few chats.
No, actually we have yes, but we will try the practice, ma'am. Then next class we will let you know.
Okay, okay, that's great. That's great. That's a spirit. Okay,
Hello,
good. Yeah.
I'm having a question. This is the very first session for this batch, right?
Actually, for no, like posting ledgers and journals, no, like this is the second, second session. Initially, there were no like 1 or 2 sessions conducted for, while for accounting, but no, those were completely. We initially saw no the theory part, completely the theory part. What is accounting all about? What are the types of accounts, and what are
Okay.
the rules
This
of no
is
accounts?
right?
Yeah,
Yeah. Okay. Okay.
you can know like get the PPT of no all the sessions.
Yeah. Okay.
Yeah. Oh,
Yeah. Clear.
so thank you guys. See you next week. Yeah, happy weekend.